Hey students, welcome to week 3 of Accounting Principles. I hope and pray your week is going well. You know, one of the hardest things I struggle with, and maybe you do too, is being honest with yourself and others about how life is really going sometimes. Be sure to watch this week's devotional that speaks to our need for Christ. All right, let's dive into this week. This week, we're learning about the concepts of recognition, valuation, and classification of transactions. I know that's a lot of ins, I-O-N, shins, but that's what we're doing, recognition, valuation, and classification. We're also looking at the double entry accounting system. T accounts are going to get introduced this week. We'll look at the accounting cycle as well as ethical financial reporting. All right, this chart gives us a 20,000 foot look, a macro look, if you will, at the accounting system and how it's impacted by economic events, both local and global, and the eventual impact on businesses as we explore accounting systems for the rest of this term. Be sure you know the concepts of recognition, valuation, and classification. These are fundamental concepts that will come up continually as we talk about accounting systems in our world today. And remember from our discussion last week about GAAP, the boundaries and the application of these terms kind of shift over time as our world changes and the ethics in our world changes. Now, there are 3 basic building blocks of an accounting system. It's the concept of double entry, the accounts, and the general ledger. Be sure to read about these in chapter 2. In the accounting cycle, there are 5 steps that are executed to compile information for decision makers, the users of accounting. The first step is to analyze business transactions, record those transactions, post the entries in what we call the journal, adjust the accounts, prepare the financial statements, the income statement, the balance sheet, the cash flow statement, as well as the statement of owner's equity. And then the last step is to close the accounts. And one step not shown here is to distribute that information to people. No good putting it all together if it just sits on a shelf. But these steps are typically repeated each month and then at the end of each quarter and again at the end of each year. Here's a graphical version of the steps and how they kind of work together. You can refer to this framework as we go throughout the course to better understand where you're at in the process of the accounting cycle. Not necessarily where you're working at, but where you're at in the process of closing the cycle or opening up new accounting information. Maybe you're at the start of a period or closing out a period. This chart kind of gives you an overview of some of the activities that go on throughout those different time frames. And finally, another discussion on ethics. As a user of accounting information, you should understand financial statements and how they're compiled and know the assumptions of recognition and valuation and classification that goes into those financial documents. All right, that's it for now. Make sure you pay attention to what to do this week, and always remember that God is on his throne. He's always been there, and he's always going to be. Have yourself a great week.